if we do it right, if we get the capital market system right, what is the potential?
It's huge. It's huge. So just imagine this. Again, I take a bit of a step back. In 2050, 10% of the African population will be Ethiopian. So you can imagine if we get it right, you are reaching 10% of Africa, yeah, directly. And then if we position Ethiopia as a regional sort of Pan-African market, you can imagine, the extent to which we can go. So I think I'll probably just take it back a little bit also in terms of we are not building the market for the sake of building the market. We are not building this market so that all of us who are here can make money and become wealthy and, and retire and all that. We are building this market because we want to solve the social and economic outcomes for the country. Just imagine how proud we'll be if we say through the capital markets, we've been able to create, I don't know how many millions of jobs. We've been able to build as a country this amount of infrastructure. We've been able to make access to this amount of services to the people and all that. And we've been able to address our climate change challenges and all that. I think those higher goals are the kind of goals that should make us wake up every morning and say, I want to be part of this. Yes, I will be successful by doing the right thing, but those kind of higher goals, I think, are the ones that will really inspire us. And I think that will be this, in my mind, that will be the test of whether we've been successful in mobilizing those long-term resources in the right type of instruments to support the economic and social welfare development for the country and also for the continent.
Thank you. Thank you. Maybe Paul, I think I want to give you opportunity if you want to add on what Dr. Evans said, but also what would be your two key messages to the regulator, Dr. Brook, and maybe two important points you want to make to the private sector?
Okay, thanks so much for that. I think, if anything, I'm answering both questions together. I think in terms of really your call for us to talk to this market and encourage more hands to go up when you say who are going to be the intermediaries, I think it's for us to be very, very clear that this is a conversation about the roadmap for the Ethiopian capital markets. And until Ethiopia is very, very clear about what its goals are and its target outcomes are, very many of us will come in and advise you, give you inputs, but you need to be the ones to highlight where you think help is necessary and to deliver what. Many people will talk at you, and until you own your desired outcome and you build consensus and convergence around what are national priorities, all we'll do is just keep going around in circles about debating what could be possible, and given the scale of your nation and economy, what could be possible. But you will not get down to work and start delivering outcomes until you own the direction you're going in. But very much in terms of the just guidance on the challenging way forward as you set up the CMA, I think central from my perspective is where the market is now. You need to have a very clear balance between your regulatory and development mandate. You will find yourself under so much pressure to roll things out quickly, to say we have done, we have delivered. But it's so critical to make sure that the right things are the ones that go first, because they set the tone for all else that flows from there. And the level of confidence and eagerness of engagement, both of investors as well as intermediaries, be very much guided by what they see as the first movers and really the standards being set by those that go first out. And in how you do that, I think it's just being conscious that even as you try to evidence the development of the market, to make sure that the regulatory side is being approached in a tight and thorough manner, so that it's the right thing that's coming to the market and the right kind of impact. The second one, I think, would just be, I think, very encouraged to hear the statements that have been made about the directives that are about to go out for public consultation. But really just to emphasize to you, when we bring together the industry in such a manner, just be very careful that public consultation is not a administrative due process. It's actually direct engagement and unpackaging what's coming and listening. But when you listen, it doesn't mean you do what they say, but you listen, you gain new perspectives, and you be able to start driving the delivery of outcomes that are the sum of parts, rather than perspective of single institutions or purely private sector, public sector driven, and just finding the right balance in how that gets implemented. And just ultimately, it will all come back to the spirit of transparency and consistency of practice that's being able to be driven in this market. So all are of a common understanding of what measures and steps will deliver the strongest outcomes, and they're working in a cohesive and coordinated manner, rather than every institution having its own institutional strategy that it's trying to deliver, but ultimately just kind of undermining or frustrating the bigger goal aspects. Thanks so much.
Thank you. Thank you, Paul. Really, really insightful.
Let me just say, I'll be blunt a bit. I think not everything, like I said, we enjoy the spotlight as an exchange, not as a person. I think both Michael and I are introverts. But it's good to see, I think, the Ethiopian capital markets as it's in a way that it's not about us, it's not about the exchange, it's not about, as you as an intermediary. The idea would be there is an ideal objective. Somebody's trying to raise funds, somebody's trying to invest. So in that sense, then, let's create value, and only then we actually compensate ourselves. So in that sense, then, see yourself as where you'll be adding value. Thanks.
Thank you, Dr. Delawan. Hannah, there's all these people gagging out to get licensed. Your message, as an intermediary, when do you see this starting? Your final thoughts?
I think some self-assessment, some self-awareness will be necessary on the part of all intermediaries. Capital markets, it's not a science. Participating is not a science. So take an assessment of what your current skills are, what your current abilities are. Take an assessment of your current systems, and then do your own gap analysis. What do I need to do to get from where I am to where I want to be? So I'd start with a little bit of inward-looking assessment.
Thank you. So we have quite a few questions. Maybe I'll start with, first Masarat's question from Dr. Delawan. Can you cover the crowd funding component, because you've outlined the various market models you're looking at from Dr. Ibrahim in terms of making the market attractive. Maybe Dr. Evans, will you be able to address that and the investment banks as intermediaries? So from experience in terms of from Kenya. Daniel's question in terms of the brokers, traders, the differences. Maybe I'll come to Hannah on those, if you can address those from the Capital Market Authority perspective. From Samson, the asset classes. Maybe Sirag, can you address the asset classes, or shall I? Or Hannah. Okay, asset classes. The regulatory flexibility, again, Hannah, if you can cover that. The bankruptcy laws, again, Hannah, that is probably it's on your doorstep. The depreciation, Samson, I will not take that because it's slightly outside of the realms of our discussion today. Tawfiq Adrus, in terms of trust, the prosecutions, the law enforcement, independence, sort of the Kenyan experience in terms of enforcing the law and the independence, and even engaging law enforcement in sort of the knowledge series, so that, of course, there are a lot of intermediaries, but after the fact, if you can cover that, Paul. And the last one on the agency aspect of intermediaries. Again, I think Zacharias can you take that? Okay. Is it the proclamation doesn't define intermediaries, and how that should be covered as comment from Zacharias? I'll start with Hannah.
Okay. I think the word intermediaries really is just reflective. It's a layman's term as to what a person does. An intermediary is a go-between. What the proclamation does is define capital market participants, and it also defines capital market service providers. What it also does is define what constitutes a regulated activity, and it says that regulated activities have to be undertaken by those who have a service provider license. So the question essentially, it's not an oversight, it's just multiple use of words. I think we've mentioned previously that we start with the wording in the proclamation, and so the directive that Sirak has been discussing really does refer to capital market service providers, those who are providing regulated activities within the market. The gentleman asked about the distinction between brokers and fund managers, as to the fact that perhaps there are conflicting messages that we're presenting with respect to those. I think it might be good just to take a step back and think through exactly what does a broker do, what does a dealer do, and what does a fund manager do, and then also think through as to how this is set out in the proclamation, and then thereafter, obviously, in the directives. So the broker is the go-between they're the ones that do the buying and selling on our behalf, on various investors. A fund manager may actually buy and sell securities, but they also undertake a different task, which is to manage a fund. So they're actually quite different. And within our space, within our capital markets proclamation, we do have brokers, yes, but we also have for our fund managers, we call them collective investment scheme operators. And so essentially, these are the people that are going to manage the fund. And I think we previously mentioned that as we look at these particular roles, we're not creating something that's unique and different in Ethiopia. What we're trying to do is follow international best practices. So I think just to say that we are actually in line with international best practices and other jurisdictions. So hopefully, as you see the directives, you'll see that they're not actually conflicting messages.
Brokerage is a service where the broker is a member of it's licensed by the authority and is a member of the exchange, and basically it executes a trade order from a client. It doesn't really provide money to investors anywhere else in the world. So brokerage firms do, maybe you're talking about margin trading, but that's based on kind of the securities you have already in account, or money you already have in an account. So that arrangement maybe is what we're being asked, but anyway. So it's in line with international best practice and what's being done around the world.
Maybe Sirak, can you touch on the international participation while you're at it?
So
potential international investors' participation on the security exchange from regulatory aspects.
Well, obviously, I think the macro financial issue was raised. FX is an issue. There has to be solutions for that, for international investors to come in and invest. I think Dr. Talaun kind of, when he described the market, we're going to start, there is nothing there, right? When you have a baby, when you have a 6-month-old baby, you don't just let him walk. He has to crawl first. So we're going to be crawling for a little bit. And then, we'll give the baby our finger, and then the baby will start walking. And I think it's better to look at it that way, because a lot of the stuff that, the products you were talking about are much advanced And it's not where we are. I mean, currently it would be highly, unlikely you would see those in the coming few years, right? So I think with that understanding, and I think the government policies that are currently in works are trying to address kind of the macro financial issues that you mentioned. I think those are applicable for successful capital market. We understand that. That's beyond our pay level, maybe, for me to address that.
Yeah.
Thanks.
Thank you, Siraj. Tilahun, maybe can you touch on the 2 points on the crowdfunding element, because on the various market models?
Just to touch on the crowdfunding. So maybe if we can look at it on crowdfunding, Tilahun can touch on what they're thinking at the exchange, but at the authority, at the regulators level, crowdfunding operators would be one of the regulated service providers that will be in the draft directive, okay? So there's the operator that actually, creates the platform. So if the exchange wants to do a crowdfunding kind of platform, side platform, they will be regulated as a crowdfunding operator. So you would be a crowdfunding operator. So you need license for that, service license. But the crowdfunding in Ethiopia, the product itself, what does it look like? That's a separate directive that we have yet to start working on. Something it's in our list of things to do. The 100 things we have to do. Thanks.
Tilahun, is there any thoughts, maybe responding to Samson's ask on derivatives, is just getting to a more sophisticated marketplace? Any reflection on that?
Thanks. Well, I don't think it went all the way back, all the way to derivatives. I think sticking around the plain vanilla products, I think there are different asset classes you can think of. So let me just say very briefly, we'll be guided by the roadmap, right? So I doubt if that roadmap would really be ambitious to develop the derivatives market. In the first place, the primary market, secondary market needs to really develop. But at the same time, within the plain vanilla markets, products, there could be different types of asset classes, which we're happy to exploit. Then it's up to the regulator to allow issuance of the securities, and up to us to say whether or not those are the products that we want to create liquidity. So we will, through our listing rules, we will assess whether or not bringing that security to our market is worthwhile or not, and that's a demand and supply question. But fundamentally, I think I would say we really start from the basics. I think that's really, both as a regulator and as a market participant, the level of difficulty that we really want to engage ourselves will be in the basics environment, and not towards where other markets are today.
Just to add on to Samson's question, in terms of regulatory flexibility and what sort of granularity we're considering in terms of asset classes, I think the starting point really is about, from the regulator's perspective really, is about the disclosure regime. So, we are regulating securities, and so with respect to any securities that are going to be offered in the market, we would expect a certain level of disclosure. That's the initial disclosure, presumably in the form of a prospectus or an offering memorandum, and thereafter in the form of ongoing disclosure obligations. And you mentioned something about mezzanine and with respect to debt instruments. So a lot of times we'll see that kind of feature in the more sophisticated non-vanilla financial products. So for example, in the asset-backed security space, that's where you tend to see the slicing and dicing of different kinds of asset classes, where you'll need credit rating agencies to provide some sort of rating on those mezzanine level debts. The disclosure regime that we build will need to accommodate different securities, but obviously, whether or not the exchange is going to take up that type of product, I think that will be in line with the roadmap. And then I think, should I just answer the next question?
Please.
Yeah, which was on OTC trading and in terms of how that's regulated. And I think the question there was with respect to derivatives in particular and bankruptcy laws. I think it's important to bear in mind that there are these intermediaries that I've presented as part of the market infrastructure, the clearing and settlement processes. So these are securities depository and clearing companies. That's how they're going to be licensed under our regime going forward. Within that, you'll have central clearing parties, so counterparties that will do the clearing, particularly with respect to OTC derivatives. Actually, Paul, this was one of his biggest pieces of work, I think, on IOSCO. I think you chaired the committee with respect to CCPs and these intermediaries. But the proclamation takes into account the fact that we will have these kind of functionaries to protect against bankruptcy by using this type of market infrastructure or intermediaries in the trading process.
Thank you. Thank you, Anna. Dr. Evans, on the question with regards to making the market attractive to issuers, the role of banks as intermediaries, if you want to touch on that quickly.
Yeah, so thank you very much. And I know this is an issue that I'm sure the Ethiopian Capital Markets Authority is considering, because it's part of the ecosystem building to make the market overall attractive. But if I touch on maybe one or two issues around incentives around tax, one thing I want to say outright is that the banking sector already exists and has certain tax treatments. The capital market is coming. I think it's going to be very, very critical that there is tax neutrality between banking sector and the capital markets. I think many markets in Africa have not necessarily got that right. So if I'm an issuer of a corporate bond, the tax treatment I get for issuing the corporate bond in the market should actually be very similar to what I might incur if I went to the bank for a bank loan and all that. So maintaining that principle of neutrality between the banking sector and capital markets is going to be very important. Now, broadly in terms of the incentive frameworks, you look at it from basically three levels. One is on the hands of the investor. So in some cases, investors have certain tax advantages for coming to the market or for accumulating savings. So pension funds sometimes will have deferred tax treatment, which basically means that every time you're contributing money into your pension fund, you're not paying tax on that saving up to a limit. And that basically enables you to accumulate savings over time and all that. So that's one area in which you can look at. And in some countries, they've also provided incentives for contributions to insurance. If you're paying an insurance premium for a life cover, which is a long-term insurance product, that contribution sometimes is considered as a tax-deductible expense and all that. So that's on the hands of investors. I must also add, actually on the retail side, some countries have also gone to the extent of saying, okay, if I'm investing in a collective investment scheme that is eventually investing in government securities, for example, and as a way of encouraging those investments, sometimes contributions to those schemes are also tax exempt. And in a few markets I've seen where the government's actually matching contributions. There are a few examples where we can cite where I put in a bill for savings, and then government actually contributes a similar amount as a way of encouraging savings. So that's on the hand of the investor. Then you go to the hands of the issuers. So issuers might also get certain tax advantages in some cases for listing in a market. So if the corporate tax rate is 30% for argument's sake, you might say, okay, 25% for the first 5 years of being listed in the market. That's just an incentive that is provided to encourage companies to come and list in the market. In some cases, you might find, and I think this is what we also sort of encourage, is those incentives at the level of the instrument, not in the level of the investor or not in the level of the corporate, the instrument itself. A corporate bond, a treasury bond that is long-term, you'll find sometimes it has lower withholding tax requirements. So if I'm buying a 10-year bond, instead of paying 15 or 20 or 30% withholding tax, that withholding tax might be exempted or it might be reduced. That's just a way of encouraging people to invest, long-term. In Kenya, there's been actually a specific incentive around green and infrastructure bonds. So if I'm buying a green bond, the interest is actually exempt from withholding tax and all that. So I've talked about the level of the investor, the level of the corporate, the level of the instrument, which is very, very important. And then, of course, the last one I want to talk about is around transaction costs. Because capital markets are high-frequency markets. So sometimes you want to make sure that the transaction costs are not too high, and that includes taxes. So typically you find capital market transactions are exempted from things like stamp duty and other forms of taxes that will make it a more attractive, to come in and out of the market. And then finally, okay, not finally, this is very important to mention also, which I think touches on transaction cost and safety of the market and all that, is a level of infrastructure investment. So National Bank of Ethiopia is investing in a CSD. So National Bank of Ethiopia might put its own money to invest in the CSD. That CSD is going to be available for the market. And because the upfront cost has been covered, then subsequently the transaction cost is actually going to come down. So it's a benefit. It's actually a benefit for the market that that infrastructure exists and all that. Yeah, and then maybe finally we could go on and on, but let me probably just stop here. Yeah.
Thank you.
I hope it just gives a bit of a
Yes.
flavor of the kind of things that you might do to encourage market development. Yeah. Thank you.
Yes, Dr. Evans. Some creative ways of incentivizing through the tax system. I particularly I'm glad that you highlighted the transaction cost element. In my days at ECX, it was one key element, because whenever there is a transaction cost that's higher, eventually the intermediaries will suffer. And most recently, I think the audience will appreciate, there's new fees introduced for real-time gross settlement by banks and the national switch, which is, in this case, when we have high frequency transaction, what happens to that cost element to intermediaries will be very much important. Final thoughts, Paul. So with regards to, I think Atofekadu raised, the market needs trust, the role of the prosecution, enforcement of law, the independence of it. Final thoughts.
No, thank you so much. Maybe I'll just start with just response to Dr. Zaidi on his issue of how we introduced issuers to market. I think very much building on what Evans has highlighted around the incentive environment you create. I think as a regulator, one thing we became very conscious of, when you talk about new products and allowing issuers to raise capital for their needs, you tend to have very significant delays in lawmaking processes. So we actually, in coordination with our Ministry of Finance, updated our act to allow us to give what we called policy guidance notes, so that it is not a law, but the regulator is giving very clear guidance to the market on, for example, for securitization, for green bonds, for depository receipt instruments. We're able to do in, you're looking at 4 to 6 months, issue a guidance legal framework to them, when passing that thing as a law would have taken anything from 2 to 4 years. So that then issuers now feel you are providing them guidance on how they can come to market and issue the right kinds of instruments for the right kind of impact. But now going back to the question on the coordination around investigation and enforcement, that's a very critical thing. And what we ended up doing as the Capital Markets Authority is, in coordination with the Criminal Investigations Department of the National Police, we set up a capital markets fraud investigation unit within the authority, so that we're able to consistently start building capacity. You have police officers that lived and had offices within the authority, so that even where now you have a fraud issue that has criminal implications, we're able to now support them to do those investigations and do only those investigations. Because police are very, very overworked people. So that we're able to get, it was between about 5 and 8 officers at any one time who were able to give dedicated service to cross-country travel, investigations, and prosecution coordination. And then we work very closely with, for example, the Ethics and Anti-Corruption Authority and the Department of Public Prosecution to make sure that we're able to fast-track timely conclusion of relevant investigations. Thank you.
If there are 1 or 2 intermediary-focused questions, I will only take 2. Ato Solomon and the gentleman over there.
My question is, are we launching the primary market and the secondary market simultaneously, or are we testing the water by first launching the secondary market? Thank you.
If you guys could sort of elaborate a little bit more on why the decision was made to let deposit-making banks become investment banks. Thanks.
Thank you, Solomon. Well, it's if there would be 1 or 2 questions that keeps us up the night, that would be that objective, right? So how do we create like that liquidity? But I think the answer is it's a complex question, so a complex answer, right? So a bit of what the government can do, what as a market facilitator we can do, what do we expect from market intermediaries? It's also a bit of a chicken and egg question, right? We want a full-fledged exchange, a functional exchange, bigger capabilities, but costly. But at the same time, we don't have the market yet to finance ourselves. Same thing for other intermediaries, I think. But I think then that complex question is being addressed as well with complex solutions, right? So I think one of the reasons why government would be, at least theoretically, let's say that right now, but we'll see later, in terms of listing some of the SOEs into the market, would be to actually enhance that liquidity. And there, yes, there is a role for us to be played, and also for the authority. One of the things that we'll be doing as an exchange is, for instance, to actually be able to acquire a broker back office system where the new, especially Ethiopian brokerage industries could be actually be onboarded on our brokerage back office system so that they do not have to necessarily incur those costs. We will be spending money in terms of market development, et cetera, et cetera. And then for the authority also to say, well, there will be a way to actually maybe support the brokerage industry, market service providers to sustain themselves until that market is up and running. It may be in terms of reduced licensing fees, some sort of capacity development programs, et cetera, et cetera. There was something that I wanted to add. I think you mentioned there is an issue about primary market, secondary market. You raised, I think Hannah will address it, but because also I heard you before mentioning this. I think essentially the primary market exists already. You're just enhancing it, creating higher level of security in terms of the instruments, the way how they're issued, registering them, the way how market service providers are licensed, et cetera, et cetera. So the primary market exists with or without us. So the secondary market will come second in line to how the primary market functions. And we'll take volumes where the primary market is efficient. Are we liquid or not? I think it's a good question, but you'll be surprised if I tell you a number, and there are some of the brokers that already work there. And I'm not accusing you of earning this much revenue already, but if I ask you today what has been the last year's transaction in terms of only financial sector securities, you'll be surprised how much volume it already exists within the existing infrastructure. So last year, more than 4.7 billion Ethiopian birr worth of financial securities have been traded. We're not sure whether they have traded for value, whether or not gifts, whether or not they were inheritances. The average for the past 5 years has been 3.57 billion Ethiopian birr. And the whole capitalization of the financial sector, paid up capital is around 200 billion birr only. Unpaid capital included 240 billion. So there's already significant volume for us to tap into and for service providers to tap into. There was a year, I think 2-3 years ago, where the total volume was more than 12 billion birr. So that's more than 20%. If in our financial model, you'll see we're okay, we can survive with a 10% transaction volume every year in the equities market. Supplement that was the debt market. I think it's just that it's not visible, But there is activity, and we just need to support it. Thank you.
Thank you, Dr. Talaun. Hannah?
Okay, Sam, thank you for your question. In terms of investment banks, I think actually it was Sirak that was talking about investment banks. So I'll say a little bit, and then perhaps Sirak will add more if as needed. So investment banks are actually defined in our proclamation as non-deposit taking banks. And obviously, when we think about capital markets and the people would like to have participating in the capital markets, we definitely want to have an Ethiopian presence in that space. So in considering that, we can't just lose sight of the protections or the reasons that we have certain regulations. So there's a reason why the NBE, the National Bank, has particular regulations or restrictions on deposit-taking banks, because they want to protect the deposits. At the same time, from the capital markets perspective, we want to have, competent and able professionals that are undertaking capital markets activities. So, this is very much in line with, a Glass-Steagall sort of segregation. There are different ways of achieving the regulatory objectives of both the MBE and the CMA. And there are different ways, different designs of doing that. And I think that's what Sirak was highlighting in terms of the holding company or segregated entities. A specific decision as such has not been taken as to how it's going to be done. It's partly not within, actually particularly within our gift as such. But I think we're all aiming for the same objective. So we're trying to see the best way to get to that point. And we've certainly put forward proposals that we think will enable us to achieve that. Sirak, I don't know if you want to add anything to that.
So I'm not quite sure where the confusion came from. It's actually the opposite. We're not suggesting deposit-taking banks should be entirely within house operate an investment bank. That's actually against the regulation of the MBE and our proclamation. So we're trying to come up with frameworks that allow these retail banks to create structures that are wholly owned by them, separate subsidiaries, for instance, where they can actually participate in the service provider space.
Just wanted to say a couple of things in terms of there are policy considerations that have been discussed, so I just want to clarify where we are. Of course, this is an open discussion, so I'm sure people will have kind of their own expectation, how things need to pan out, specifically when it comes to the tax issue. As you know, our tax base, tax to GDP is growing in a declining rate, and we need to start focusing on making sure that we have an expansive tax base. So we're not one advocating for tax reduction for the sake of tax reduction. So what we're focusing on is identifying areas where, if for the capital markets to work, if there are tax policies that we need to review, we will review that and then communicate that with the rightful owner in terms of policy action, which is the Ministry of Finance, and we're engaging in having a discussion. But there is no as such decisions that were made, and this is something that we're still in conversation. In terms of the securities depository, this is a collaborative effort between CMA and National Bank of Ethiopia. So this is something that will evolve. A new system will be put in place. We wanted to invite especially the banks, the private banks that are already in the market, to start looking into a possibility of dematerializing your certificates. We will work with you, will support you in any shape or form that you would need. And I'm glad that some of them, in fact, are getting very much ready to start dematerializing immediately once the CSD is in place. And of course, there are other licensing parameters that you would see on the directive. The most important thing is we're not doing the public consultation just to take it off because of the administrative law requirement. We really mean to get your input and insight on the parameters, the initial capital requirement, the corporate formation, and of course, the fact that there are people already who wanted to be intermediaries you guys would have a clear understanding of how you wanted to organize yourself. Let us know if there are things that we missed. We will adjust. Ultimately, we're trying to create a functioning capital markets with the view of you, the domestic participants, the Ethiopians who are in this room, who wanted to become, license holders. So we have you at the back of our mind when we start having debates in terms of what should be the capital requirement, what should be the experience. So have a look at that. Let us know in terms of what needs to be designed. But other than that, please, I'm very much grateful for Ermias and FSD team for organizing this. We will be doing similar type of outreach, as my colleague Sirak said earlier. We're very much open for consultation and dialogue. Reach out to us. We'll be more than happy to take your comments and criticism and then really build this important institution together. Thank you.
Thank you so much and have a great day.